Hello and welcome to the Loan Officer Wealth Podcast. I'm your host, Chris Johnstone, and I have an incredible offer for you today. What we've done is we've taken the 10 most profitable methods to grow your mortgage business that we have learned from interviewing the producers on this podcast, many of whom are doing over $100 million in volume per year. And we've packaged them together into a condensed 45-minute training where you get to learn the 10 most successful and profitable activities that you should be running in your mortgage business. Then we show you how to automate those processes with people and systems so that they run and continue to produce loan applications and new partners that want to send you business pre-booked into your calendar without you having to do any cold calls or chasing or really any work. It's a blueprint for you to be able to produce more in your business while actually working less. And you can go get that training today for free at chriswebinar.com. That's chriswebinar.com. So make sure you head over there today, grab that training for free, and make sure that you watch it, because the sooner you get started on implementing these strategies, the sooner you can see results and continue to grow your mortgage business. Thank you again for being here with us for this episode, and enjoy another one on the Loan Officer Wealth Podcast. Hello, everybody, and welcome back to a very special episode of the Loan Officer Wealth Podcast. We are joined by Barry Habib. Barry, thank you so much for being here.
Chris, it's great to be with you. I love the title of the show, by the way.
Thank you. Well, if you've been in the mortgage industry for any amount of time, Barry needs no introduction. But that being said, I would like to say that his most recent book, Money in the Streets, is an absolute must-read. I've absolutely loved it, and hopefully we get to dig into some of that towards the end of the episode here.
Of course.
Awesome. So, Barry, let's start off by talking about what's happening in the marketplace, what loan officers are experiencing right now, and kind of help shine a light and clarity on what's happening in the marketplaces and what loan officers can be doing right now in order to make sure that the businesses are still healthy.
So if you're a loan officer right now, and I was a loan officer that went through some ups and downs, did it for over 20 years, and I understand. I know what it's like. I know what it's like to start every month at zero. I know when things are good, they're good, but it brings a different set of heartburn. But when things slow down, there are a lot of different issues that arise, and certainly anxiety and uncertainty can make you feel a little uncomfortable and even fearful. And I don't blame you if you're feeling that way. So that's completely normal for you to have these feelings of concern and even fear. Many of you are in positions where you've got to make ends meet. You want to be successful, and you see things are different. You've got people counting on you and depending on you, and in the back of your mind, there's uncertainty that you have to deal with. So before we get too far, Chris, I want to just tell people that there's light at the end of the tunnel. There's definitely some good news that is out there. We'll talk about where we are and why, but let's start with the fact that rates are going to come down. Q4, Q1, you're going to see rates come down. You're going to see them come below 5%. That's going to give the housing market a little bit of a revival here. So that will be good. But believe it or not, it'll also be very good for refinances, because anyone who's taken out a loan between April and now and into the next few months will have the opportunity to refinance. So anybody you've done, it's like a 2-for-1 kind of deal. So it's going to be okay. I just want you to know that you're going to be okay. But I also don't want to, I'm going to give it to you straight here. You're in for a little bit of a tough time in between. And we'll talk about all the reasons why, but I just want to give people what they can expect. But what's more important than that is we need to be able to not just understand it, which is critical because 99% of your competition doesn't, but we also need to be able to teach it and explain it. Your real estate agents are feeling the same level of anxiety. Mm-hmm. Your customers are unsure. People are coming out of the woodwork now to tell people don't buy a home, miss the opportunity. But they've been doing that for the last 10 years, haven't they? So we have to be able to be on our game here. And I want you to look at this as an opportunity, because now more than ever, people need your insight. And you're not going to be able to cut it the way we were cutting it the last couple of years. People are throwing loans at you You're spending your time qualifying and quoting. That doesn't make it right now. Okay. And let's face it, this thing right here, it can do all that faster, more accurately, and less expensive than any of us are possible of doing. So what we need to be able to do is differentiate ourselves, not as just rate quoting machines and qualifying machines, because that's easy enough to pass off to automation. Get out of that war and do something your competition's not. Explain what's happening in the marketplace and why, and that's what we'll spend our time on today, Chris, so people can understand and explain it.
Yeah, absolutely. I cannot agree more. And building the relationship with your clients so that you actually have somebody to have a dialogue with, so that when you do have the knowledge from today's podcast and from MBS Highway, and you have something to talk about, when you're putting it out on social media, you've taken the time to build your tribe of your past customers so that they're there to listen to you when you have the advice to give to them. Barry, you mentioned that there is going to be a little bit of a lull here. There is going to be a little bit of a slower time before rates tick back down. And now's the time to double down on database activation and building out, reaching those relationships and educating those people so that you have them to talk to when rates do come back down and you have the opportunity to have that other side of that transaction. So that's
right now where we are. Let's kind of explain where we are and where we're headed. So, like anything, price is determined by supply and demand, and there is still a lack of supply in the housing market. We form households in the United States at a rate of about 1.7 million a year. And a household formation, take a family, and they're living in one dwelling. But somebody comes of age and leaves. Family still remains in the dwelling, but now that person needs their own place. They just formed a household. A couple living together, one dwelling, they split up, one person remains behind, the other person gets a new place, same two people, but instead of one dwelling, two. Those are household formations. It's happening at about 1.7 million a year. So the other side of that, supply and demand, the other side is the supply side. Where does that come from? It comes from new construction, but it comes from new construction that's completed, not just a hole in the ground. And right now we're completing about 1.4 million units a year. So that's less, but it even exacerbates it because of those 1.4 million units, about 100,000 of those are replacements or rebuilding, or those homes that just from age get destroyed. So we're building 1.3, we need 1.7. The math would suggest that there's a lot of support for home prices. We're not going to see a crash. Some markets will see some prices moderate, come down a little bit. I'm sure people are going to take a victory lap because they've been saying for the last 6 years or so, don't buy a home, there's a housing crash, or even for the last 3 years. In the last 3 years, home values are up 50%. So you get a 50% rise, you might see a 3% drop, and they're going to say, "See, I told you so." So it's like we just have to be on the lookout for that. So home values are going to be determined by supply and demand. So why are we seeing what we're seeing right now? Well, clearly it's because interest rates have risen. So if we want to understand what's causing interest rates to rise, and we understand the cause of what makes interest rates rise or fall, then we can better anticipate when we will see interest rates come back down to a lower level, and why I'm saying that rates will come back down under 5% sometime between the fourth quarter of this year and the first quarter of next year. So what's the driving force of interest rates is inflation. Because what inflation does is if you're the lender, you're receiving fixed monthly payments. That fixed monthly payment, the value of it is eroded if the costs to buy things with that fixed monthly payment rise. If it rises at a very small rate, 1%, which we had been experiencing the last few years, well, then you can offer a rate that's pretty low because you're not that worried about that rate of erosion being material. But it's gone from 1% to 8 or 9%, and the headline rate about 6.3% on the core rate, which strips out food and energy. So your buying power is being eroded at a much more rapid pace. The only line of defense that you have on future mortgages that you will be lending out is to start at a higher perch. You get there by charging a higher rate. So now you collect more money every month, which now offsets the more rapid rate of erosion of your buying power. And it's that simple. When inflation goes up, rates have to go up to account for the erosion of buying power. When inflation comes down, rates come down. So we've seen inflation go up. It started going up in 2021. but the Fed rigged the game. The Fed had QE until
Yeah.
roughly February of 2022. The Fed was buying, mortgage-backed securities in large quantities. So while inflation was rising, the Fed thought it was transitory. Mortgage rates should have been moving up, but because of the Fed buying, those purchases meant there was such an appetite that you didn't have to offer a higher rate. You had a buyer in there that was a mystery buyer that was just buying all these things up. More people buy, okay? That means the price goes up, and when price on mortgage bonds go up, yields come down, right? That we all know that relationship. So the second that the Fed took off the magic mystery buyer program, well, what happened? Mortgage rates did what they always do. They followed inflation. If you look at the chart, you'll see as inflation has done this, mortgage rates have done this. In June, we started to get better news on inflation. So inflation came down. What did mortgage rates do after June into July? They came down. Then the numbers came out showing inflation was up and mortgage rates went up in tandem. So we see that relationship. Now, so we know this. We know that mortgage rates will follow inflation, and the housing market will be closely attached not only to supply and demand, but also influenced by mortgage rates. So inflation holds a real key. Now, if that's the real key component, then in comes the Fed. What's the Fed trying to do? So many people think, oh, the Fed's going to hike rates, mortgage rates going to. No, the Fed does not influence mortgage rates directly. The Fed has the cheapest money in the world. So that is going to be the Fed funds rate. And what the Fed has done is taken that Fed funds rate from 0 now up to, with the most recent Fed hike that we're seeing, they're going to bring that up to 3%. That's a big jump. So, and they're going to continue to do that. Probably November 2nd will be another hike. They'll bring it towards 4%. What is that trying to accomplish? So for every $16 out there, 1 is in cash and 15 of is credit. Think about that. Imagine if all you could do is purchase what you had in cash. Well, you couldn't buy that car, many of us, right? There's that $70,000 car. Unless you have 70,000, you can't do it. So what do? You take out credit for it. Even a lease, it's credit, right? Yep. Or a loan, it's credit that goes out, because on the other end of it, the seller of that car received the $70,000. So somebody got $70,000, you're paying $600 a month or $800 a month, right? But somebody's got $70,000. So you really created $70,000 out of thin air by using credit. Mm-hmm. What's inflation? The definition of inflation is too many dollars chasing too few goods.
Yep.
So what the Fed is saying is they said, we want to take dollars out of the equation. We want to create less dollars, not in cash, but in the credit that's out there. So they want to do something called demand destruction by making it more expensive. Mm-hmm. Now, what will they influence with the Fed funds rate? We said it's not mortgages, but what is it? Credit cards, car loans, which we just talked about, home equity loans, lines of credit. All those are attached to the Fed funds rate.
Okay.
You'll pay a little margin above the Fed funds rate. But the big ones are the commercial and industrial loans. I'm going to acquire that other company for $700 million. How do I do that? I'm not going to do it in cash. I'm probably going to do it with a big amount of debt so I don't dilute myself. I'm going to build that huge factory for $400 million. Well, chances are I'm going to take out a loan for maybe 300 or 350 million of that. Yeah. And those are the big ones. So think about it this way. If I do that, well, I've just created $300 or $400 or $500 million out of thin air, more dollars that come up, right? That's kind of something I might want to do when the Fed funds rate's 0, and maybe I'm getting a deal that's 2% above the Fed funds rate. 300 million at 2%, I could figure out that maybe I'll get a return that makes it worth my while. But now if the Fed, as of November, gets up to around 4%, I'm paying 6 or more. Well, there's a big difference on $400 million, paying 2% and paying 6% or 7%. And the math may not work for me to do that. And that's exactly what the Fed wants to do. They want to slow it down. And they always go too far, so they slow us down into a recession.
Right.
Mortgage rates come down during a recession. So the way that inflation is measured, you get a year-over-year number of inflation. But that year-over-year number of inflation that we all see quoted is broken up into the 12 most recent months. You add them together, maybe account for a little compounding, and that gives you a year-over-year rate. So what we saw is that in the second week of September, we got the data for August of 2022. It was up 0.6%. on the core rate of the consumer price index.
Hmm.
It replaced August of 2022, now replaces the oldest month of the 12 months, which now becomes the 13th month, August of 2021. So that goes away. In comes August of 2022. Well, August of 2021 was a pretty low reading. It was only 0.2% for August of 2021. You replace it with 0.6%, and the year-over-year number jumps by that difference of 0.4%. The market saw that, and it threw up. And that was the problem. Now, anybody who saw my forecast for the year, anybody who's heard me speak, anytime this year, and there's been a lot of them, or been to one of my webinars, you all saw me bring up the same chart where we said it's going to be a cruel summer. And we showed specifically that July and August numbers where the inflation for those months from 2021 was very low. So that low bar meant that in 2022, it would be very hard to see inflation come down and very easy to see it go up. So we thought that inflation would go up. We felt that rates would go up over the summer. Yeah. And even when people say, no, it's peak inflation, I remember I did a whole thing for John Malden's worldwide conference and on TV saying, hey, don't believe these people. They don't know what they're talking about saying peak inflation over the spring and early summer. It's not good. It can't be. Yeah. We saw peak inflation happening, and I still believe it's true. And I think that we're going to be proven correct October, because starting October, when you now replace the 2021 numbers, the readings from 2021 starting October are much higher.
Okay.
So it'd be easy to see them start to come down from the October, November, December, January. That's why we're saying fourth quarter, first quarter. The readings for this year will have as part of it the Fed hiking rates, things slowing down. Also, by the Fed hiking rates, another thing that they do is they promote savings. Remember when you went to the bank and you didn't get anything for savings, right? 0.0. Psychologically, human beings, if you get less than a 2% rate of return, this has been studied, you'd rather spend it or be speculative with it.
Yeah.
But if you get more than 2%, you start thinking about saving it because you get an actual rate of return. Well, now if the Fed's at 4%, you'll start to see rates that you can get in a savings account. And that's what the Fed's objective is. So instead of spending it, more money in the economy, I won't spend it, I'll save it. Okay. And that's why we believe, and also the goods component, supply chain starting to be worked out. Thank goodness we averted the railway strike. Thank goodness. So we should start to see goods flow. In fact, I have reason to believe we'll start to see prices come down on goods because we will have an abundance of them. That tells me that we're going to see not only high comparisons that are easy to beat, but actually lower inflation now. So when we make those comparisons, you'll see big chunks coming down, where those inflation readings could be coming down 0.5% per month. And what do? You get like 4 months of that. And now that inflation reading goes from 6.3 to like 4.3. Yes, the Fed's targets too, but we start feeling a lot better and the needle's moving in the right direction.
Yep.
Now, maybe the Fed starts to get wind of this and says, hey, maybe we don't wait for it to get to 2%. Paul Volcker in the early 80s took the Fed funds rate from 8.5% to 20% in 6 months.
Wow.
Inflation was at 14.6%.
Huh.
Guess when he started cutting rates? When inflation was a 2% target? No, inflation was at 11%. And he started cutting rates. Why? Because he was able to say, look, the trajectory is turning quickly and we're going to see it coming down quickly. Let's not wait for the credits of the movie to roll. Okay, let's get ahead of it, because the Fed has a habit of like driving by looking at the rear view mirror. Alan Greenspan gave a great analogy. He was a good Fed chair, and we've had some pretty subpar ones since then. Bernanke was terrible. Yellen was maybe the worst ever that we've ever had. Her and Arthur Burns, and now Jerome Powell has truly bungled the situation. So when we see what we're looking at with regards to Alan Greenspan's analogy, he said we have to kind of be able to anticipate things, because when you take your morning shower, you turn it on, and if the water's cold and you would like a hot shower or a warm shower, if you turn it to the extreme hot, for a moment it'll feel okay, but then you'll burn yourself.
Yeah.
Now, instead of letting it cool down, look, if you turn it to the extreme cold because it's too hot, you'll never get it right. And that's what the Fed does. That's why they create boom bust cycles. They hike too much and they cut too much. And they never kind of get it right. What is needed here is you kind of set it and be patient, because the economy needs to catch up. Look, the day that the Fed takes action, hike, cut, whatever it is, nothing changes that day, really.
Yeah.
30 days later, people who now see it in their payment go up,
Yeah.
experience it for the first time, but they haven't taken the money out yet. It's the next month when it finally gets paid and comes out. So that's 2 months there. But if you're in the middle of a buying decision, you probably in the midst of it go through with it. It can really take 3 to 6 months for the full effects of a Fed hike or a Fed cut to filter its way through the economy, which is why the Fed can't seem to do this, but they should be thinking 3 to 6 months in advance. And we've already heard from Fed members that they're not going to do that. They've told us, they said, we're going to keep hiking rates till we see inflation go to 2% and stay there for at least 3 months. That's just utter stupidity. And it's a shame.
Wow. But an incredible forecast, Barry. And I know we've got a lot of technical people that listen to this show that absolutely love that. But for everybody in the middle, that makes it incredibly easy to understand and very well explained. So thank you for that.
But we have to do that. Okay, it's inexcusable for us to not understand it. Anybody who's out there in the mortgage business that thinks their product is mortgage, well, you got a product that sucks. Okay, your product sucks because nobody wants to be in a lot of debt with a high monthly payment so they can't go out to dinner. That's not what people want. You have to understand what people want from you is money. You're in the money business, not just the mortgage business. The mortgage is how you get money to people, which means you have to understand how money works. And what are they using money for? They're using money to buy real estate. What you do is you sell money to buy real estate. You better understand money, and you better understand what drives the real estate market.
That's right.
Because if you don't, somebody else who does will have an enormous advantage over you.
Yep, absolutely. And the person that can explain it the best is the one who wins not only the customer, but the referral partners as well, when they can.
Chris, nobody came out of the womb and started to be able to understand and explain it. These are all learned behaviors, okay?
That's right.
So this is what we have to do. If you learn it, you should be able to explain it. I mean, what I just went through with you, really, I think almost anybody can understand what we just went over, right? I mean, it just makes sense. It's not complicated. So each and every one of us needs to be able to do that. So our customer says, okay, well, wow, that makes sense. Somebody else is clueless. What else am I going to miss if I don't do business with you?
Absolutely. Yeah, so true. And especially not just realtor referral partners. That also goes for explaining it to accountants, for explaining it to financial planners, because the mortgage market is such a nuanced part. It's just a small component of what they do. And when you can bring that clarity to them, there's all these other pathways that you can have as far as referrals in your business when you take this knowledge that Barry has given you and you disseminate it.
9 out of 10 of them will think that when the Fed raises rates, mortgage rates go up. It's the exact opposite. When the Fed raises rates, if it curbs inflation, mortgage rates come down. Little history. Alan Greenspan in a year raised rates by over 2%. Mortgage rates came down 3%. Again, let's take a look at Paul Volcker. Raised rates by 11.5%, from 8.5 to 20. Mortgage rates came down 6%. Okay, so just know that it's not the rate of the Fed funds rate, it's the rate of inflation. Now, the Fed could hike rates and mortgage rates could go up if it's believed that the Fed's beyond the curve or if there's driving forces pushing inflation higher. But if the Fed hikes rates and is successful in curbing inflation, then mortgage rates go down based upon the Fed hiking rates.
And just there's some social media gold in there for all of our listeners to put out there, and some other incredible things. So, Barry, thank you for that. That's incredibly helpful. Is there anything else that you want to add on kind of like the knowledge and understanding to the market for our loan officer listeners right now?
Well, as we talked about, the housing market is one where it's gotten beaten up from the media, but it's still proven to be very strong. Now, there's areas in the West and the Southwest that have been very, very heated. So they could come in a little bit. We don't expect crash-like conditions. If you wanted just a quick comparison, back in 2007, we had 3.8 million units in inventory. Today, there's 1.3 million units in inventory, a third of the inventory, but yet there's 14 million more households, or about 30 million more people. So competing for 2.5 million less homes in inventory. But that's not the full story, because out of the 1.3 million homes in inventory, half those almost are under contract. So there's only about 740,000 homes available in
Wow.
inventory. We're a country of 340 million people. Inventory is still very tight. And as I explained earlier, we're forming more households, and the supply is just at the present time not keeping up. Could builders build a little bit more? Sure, they could, but we currently have a bit of a shortage here, maybe quite a bit of a shortage. And when interest rates come back around, you will see more buyers come into the game.
Absolutely. I think, although, a little bit of a speed bump in the marketplace right now, it's a fantastic time to just get back to the fundamentals and get back to the disciplines of we're in business. It's not normal what's been going on the last 2 years. And now's the time to really double down and build yourself a nice, solid, successful business that you can grow from in the future.
Well, if you're talking to your customer, it's true that rates are higher, but you'll refinance that to a lower rate. So that's temporary.
Yeah.
If you consider what the conditions were, you had to spend $50,000 over asking price. You had to forego a home inspection, sometimes forego an appraisal. It was tough for buyers.
Yeah.
Now it is more of a resumption of what seems like a sensible environment. Maybe, hey, maybe I can knock 20,000 off the price or 10,000 off their asking price.
Yep.
I'll get my home inspection. Maybe I'll get them to throw something in that I wanted to. I'm saying that, like, you can work out some terms now. So this could be a good time to buy. The negative is that instead of a rate around 3, it's around 6. But within a year from now, you probably get down to a rate in the 4s. So,
Right.
not a bad thing at all. It could be your. I think that you can have a forever home without a forever loan.
Ah, I love that saying. That's phenomenal. So, Barry, if you don't mind, maybe a little bit of a shift in the conversation because you're a very successful individual, looked up to by so many in the mortgage business, and your book, Money in the Streets, talks a lot about mindset and making sure that the game that's played up here is so much more important than maybe the tactical strategies of what happens. So could you talk maybe a little bit about your story, how you got into the mortgage business, how you found success, and maybe some of those mindset tips that you can share with people that are struggling a little bit with the marketplace and some of those types of tips that you have for people? Because I think your wisdom on those topics is just invaluable right now.
So it's been studied, and the most common trait among successful people is optimism.
Huh.
It's so your outlook and your mindset's very critical, but then, you just can't have just mindset. You have to be able to be willing to put the work in. You have to, you want to be able to begin relationships by giving. So many people start by asking. You want to get a new referral relationship. You mentioned it, right? So, okay, how do I get it? So I go, hey, nice to meet you. I can do some loans for you. I'll help you out with a loan or this. So you're asking for business. So you're beginning the relationship by asking. That, in my opinion, is not going to work as often as beginning the relationship by giving.
That's right.
I saw your listing that you posted. I created a real estate report card for you that you could bring to the open house. Here's an AVM report that I did for you. Here's a cost of waiting report that I put together for you. Here's a tool that would show as an investment, if somebody came in as an investor and they wanted to purchase it, how they would make money, what their rate of return would be, what their cash on cash return would be, all on your property. And this might help you sell that home. Hey, I know you're going on a listing. Let me give you this AVM report that I just can pull up on anyone that you want so that you could bring it to that listing and help them. And certainly not one from Zillow, because then all the army of Zillowites will try and attack them for their mortgage and for another real estate agent to do business with them. So you want to keep away from the Zillow site. So what you are trying to do here is begin relationships by giving, by using the right tools. It is, at this point in time, it's always inexcusable to not invest in yourself and not to have your brain is the biggest investment, is what you should be making, right? To be the foremost expert in your marketplace. You want to be the best. Some of my story is that I had dreams of being a professional ball player. I was a good ball player when I was a kid. And good in high school, but man, when I got to college, it seemed like people just got better than I did. And the thing that I love about sales and the thing I love about what we do is that you don't have to bench press 500 pounds. You don't have to be able to dunk. You don't have to be able to run faster than ever. You just need one thing. You need to have heart. How much do you want it? How much are you willing to do to be the very best, because you can be the very best no matter how tall you are, how fast you are, it doesn't matter. Okay. You can be the best at what you do by learning the markets, explaining them, and being the source that people go to make sense of things in times like this. When it's busy, great, business is being thrown at you.
Yeah.
But now is the time people need a beacon, they need a guiding light, and that needs to be you, whether it's on social media, whether it's in the networks, whether it's one-on-one, whether it's doing a little meeting for an office full of real estate agents. But you want to increase your closing ratios, not by quoting rates, not by qualifying somebody, but by giving them true guidance and being an advisor. Look, I think we'd all agree that, wisdom and knowledge are two different things. Knowledge is important, but wisdom is a real valuable commodity. The Fed has 18,000 employees.
Oh.
They have 400 PhDs. And yet they've admitted that they don't understand inflation, and they've bungled where interest rates go, and they've bungled the economy, right? So they have knowledge, but they don't have wisdom. What we want to make sure that we have is that wisdom. So seek it out with mentors, seek it out with tools, seek it out with knowledge, reading, absorb, be a sponge to enrich your brain so that people will want to interact with you because they will gain something from you. Yeah. And be a master of being able to communicate it. Communication is simply a communication between us, Chris, is you have an idea in your head and you want to put it in mine, and vice versa. And we'd like to do it for those listening right now, right?
Yeah.
So the problem that many people have is they come to a conclusion in their own mind and they expect to just throw it out there to the person without giving them the benefit of how they got there. Now you need to work and practice on how to do that in an expedient manner. You cannot, take them through the journey of how it took you 6 months to kind of come to this realization. So, but you have to make that part of your communication. Everything that you and I have discussed, everything, you've explained to me very, very clearly. You're very articulate. And I hope that although the things that I've talked about, many people would initially feel are complex, we tried to make them so they make sense.
Yeah.
And what happens to the listeners now, they've got that idea that was in your head clearly in their head, and they actually feel a lot smarter and a lot better.
Yeah.
I talk about it in the book, but being magnetic, everybody you love people that are magnetic, right? Magnetism comes from being able to, when you meet someone, make them feel better, make them feel smarter.
Yeah.
Make them feel smarter by helping them, and you want to plant the seed when the ground's fertile, right? So when a topic comes up that you have an opportunity, you want to be able to do that. And every customer today is asking you, every customer, is there a housing bubble? Every customer is asking, which way are rates going? What does it mean with the Fed? What do they do? What a wonderful opportunity to gain this knowledge, gain this expertise, and then shine.
Yeah.
Every person you talk to, shine. This is your chance.
Absolutely. And the one point that you put there is to take that 6 months of knowledge, to take that career of knowledge, and to actually spend the time putting it and distilling it down into something where somebody else can repeat it at a dinner party. That's really what your borrower wants to do. They want to be able to explain it to their wife or to their husband or to their spouse, or they need to be able to have that 4-minute social media clip or 30-second clip, depending how good you can get it. They want to be able to understand it and then repeat it. And then that repetition, they're associating that back to you. And the more they repeat it, the more they understand it. And all that value comes from you. But you've really got to step outside, take this knowledge here, take the time to distill what it is for you, and then put it out in the marketplace so that we can help people in each of your different local economies.
I mean, think about it, Chris. You and I have been conversing for 30 minutes, right? Something like that. And the time that I've been speaking has been perhaps, let's say 20 or 22 minutes of that. Think about 22 minutes of what we have covered. Okay. The housing market, supply, demand, construction, household formations, the Fed, where rates are going, history of the Fed, who's done what the results are, mortgage rates, what drives them, inflation, what drives inflation, what is inflation, what can cause inflation, what can kill inflation, the incentives of creating money or demand destruction. Think about all those topics. And I hope that they were very, very clear to understand in 20 minutes.
Right.
You can certainly take one of those things that you can explain to your customer in 3, in 2. Okay. Those are things that you could do, but you can't just say, housing market's going to be good.
Yeah.
Why?
Right.
Why? Okay. Can't just say, okay, well, rates going to come down. Okay. Why? Can't just say,
Yeah.
well, the Fed doesn't matter what the Fed, the Fed can actually help us by hiking rates. Why?
Yeah.
So you have to metaphorically hold your customer's hand and take them through that journey. That's great communication. We could solve so much of the world's problems if we could communicate.
Absolutely.
Much of the disagreements we have, much of the frustrations we have come from misunderstandings.
That is so true. Wow. So, Barry, and thank you for being so generous with your time. Final question, if I may.
Okay.
And
We
I
have
think,
time, so that's good.
okay, all right. So, I think that this is valuable for our audience because it's very difficult sometimes to put yourself out there. And when people are asking about rates, and we're helping people with a large financial decision. So, we get a lot of people that are scared to put their ideas out there on social media. So, I thought maybe you could tell your breakthrough story of that first media appearance that you got simply by being there, posting content and posting just really valuable content.
Okay, so I'm going to date myself here. So that was kind of like before the internet was out there. Okay, so we first were exposed to the internet 95, 96, just as the general public goes, right? So I'd been an originator for about 10 years already, right? So look, I grew up, my parents were immigrants. I'm first generation born here in this country. And, it was very tough because while my family had, done well in Europe, well, they gave up everything and sacrificed everything because they saw more of a future here than there. And so I respect and honor that every day and try and make those sacrifices that they made worthwhile. But I grew up really poor. My dad passed away when I was a young boy, and my mom, she worked in the sweatshop, and I know what it's like to be poor. So it's really important to me to help others because I know what it's like to be in that position. But again, optimism is it's a very good quality to have, and we can all improve our level of optimism simply by the lens that we look at things. I'm not saying be foolish, but be optimistic. And the harder you work and the more you learn, the more optimistic you become because you gain more and more and more advantage. The better equipped you are and prepared you are, you gain more advantage.
Hmm.
And so as I learned, I wanted to learn more. So I went out and said, I realized at a young age in the mortgage business that we are truly in the money business, as I've expressed to you before. And so therefore I got my Series 6, 63, Series 7 licenses because I really wanted to understand the whole picture. I studied how real estate works as an investment because that represented about 1 out of every 6 transactions. So I wanted to make sure I was part of that and I didn't want to lose that. So I didn't limit myself, and I certainly didn't want to limit myself to just qualifying and quoting. So the more I learned, the more of a resource I became for others. And then I said, okay, maybe I can share this knowledge. And I actually sought out media opportunities with a local newspaper because I'd read things and I'd be smarter than that. And I'd say, no, you've got it wrong. So politely, I'd write in and clarify. They say, okay, well, we interview you? So I was getting media opportunities and through local newspapers, which then became statewide newspaper media opportunities because they all look at this stuff, which then became an opportunity on local television, which then led to an opportunity on CNBC, and then led to a 13-year run where I had my own show on CNBC. And then, of course, Fox and Bloomberg and all these others that had me do that. And then I also at the same time started a professional career as a speaker because one of the best ways to learn is by teaching, right? So that had helped me constantly be sharp. I mean, look, I appreciate the kind words of saying that people look at me as someone who can help them and educate them. But I consider myself a student. You would be shocked at how much I read every single day, try and learn every single day. It is hours every day. It's just part of the discipline because I have responsibility. And my responsibility is to our subscribers and those who come and seek knowledge from me. I need to be able to be really sharp all the time and on top of my game. But now as a mortgage professional, don't you feel the same way that you need to be that way with your customer? So when you say, what was the breakthrough? The breakthrough was the realization that I wanted to be the very best that I can be. I want to be the best version of myself. And that was the breakthrough, because that led to everything else. That led to my thirst for knowledge, my thirst of expertise, my constant educating myself, and then being that resource. And the more you do it, the more confidence you gain. And confidence, not cockiness, is a very attractive quality. You will be more magnetic. You'll draw people to you. So I know that right now, if this isn't exactly the market that you wanted, as I said at the beginning, I empathize with the fears that you might have, but use the extra time that you have available as an opportunity to be the very best version of yourself and gain the knowledge that you need, because it'll get you through this time. It's not going to be a long time.
Yeah.
And it will change your life for the better now, and especially exponentially as things begin to turn. And there is exponential growth. There is exponential growth that occurs. If you are the best version of yourself, you get so much more, which then gives you so much more and gives you so much more. You know that, right? You already know the way that works, right? Someone who does a few transactions has fewer refinance opportunities from past clients. Somebody who does a lot, they get a lot more refi ops because they have a lot bigger client base. And then that gives them more referrals and more. The exponential growth is what we want. Exponentially grow your brain, because that puts you in position to exponentially grow referral sources and clients and create enormous wealth for yourself and enormous fulfillment. It's one thing to write a loan for somebody who comes and say, I need a loan. There's the quote and rate. Okay, that's good. That's great. But it's so much more fulfilling when you help that family who has listened to the media incorrectly, about to make a wrong decision or about to choose a wrong type of strategy or product. The other thing is to listen. And listening is really critical, because, one of the important questions I'd ask my customer is, so tell me what you're most concerned about. And the reaction would normally be something that they're most concerned about either the home or about the loan or the terms. I just want to make sure I can make the payments, I'm just a little worried about that. And then you could talk about that. But then I'd say, okay, now aside from that, what are you most concerned about? And it might take a minute for them to answer. And then, I don't have enough, as you could say, not really set up with savings for retirement. It's okay, well, maybe we should choose a mortgage product that helps you achieve that.
Mm-hmm.
But did you know that it would only be slightly more and you qualify for a 25-year term or 20-year term instead of 30? And let me show you what that means 12 years from now, when you think that you'd probably be in a position that you said you might move. You told me you might be moving, like staying in this house for about 10 or 12 years. Well, the difference between a 30 and a 20, for the amount of money you probably would have blown anyway and you wouldn't have felt.
Yep.
What this will do for you is it'll create $94,000 more. And that might be helpful for you when it comes time for retirement.
Yeah.
And it's that type of, so you have to ask the questions, you have to listen well, you have to give them the opportunity. And then you can't give what you don't have. So you have to have gained some expertise in being able to do that. You shouldn't do a mortgage application without at least going through the amortization schedule with your customer and showing the magic of how it works, because they are clueless as to how it works. Maybe most mortgage professionals don't understand how it works.
Mm-hmm. Yeah, that's so true. And, in all of these professions, financial planners, insurance advisors, all of that, it's the details are what's important. And for people that do it every single day, those are the things that we want to skim over, because it's the boring details. But you're so right, Barry. There's so much value in there. May I ask one more question?
Sure.
This one's for me.
Okay.
So, Rock of Ages.
Yes.
I see the finance background. It seems to be very much in the real estate and finance world. And then we have an entertainment show, very successful. How did that story come about? How did Rock of Ages become a thing?
So I also have Chris Angel in Vegas, which is very successful. I did Bonnie and Clyde in London too. That was a good show. I did the Whitney Houston one. That was a flop. But so you don't always get lucky. So believe it or not, I've done quite a bit of acting, the TV things I did. And I've been in 10 movies, and, I'm a friendly person. So get to know people, and, I try and be kind. I try and be friendly, and made some relationships. And on the movie set of Barry Monday, Munday, which, by the way, I made the trailer. It's actually a very good movie. A lot of stars in the movie, and and I'm in it. I play a doctor. I made the trailer, as I mentioned, which is kind of cool.
That's so cool.
So in that romantic comedy, the writer and director, Chris Dorenzo, and I became kind of friendly. And Chris said, Barry, he kind of got to know me a little bit, knew I had a background that was good on what was going on in the economy and the overall markets. He was interested in that too. So we became kind of friendly. Again, you can't give what you don't have. So I was able to give something in that relationship.
Yeah.
And he said, Barry, he says, I've got this theatrical production. I wrote it, and he showed me the script, and I loved it. And that was a script for Rock of Ages. So me and 4 other guys got together, and it was a good thing I was ignorant as to how risky it was, right? But my heart was speaking to me, and I just loved it. And I love music. I sing in a band. I love the music, right? And so we took a shot. We brought it off Broadway, and nobody gave us a chance. And then we said, well, let's give it, let's do it. So it became a hit off Broadway. In fact, only the second off Broadway show in history that got a movie deal. Well, then we said, I guess it's time to really take a risk and put it on Broadway. So put up a lot more money, put a lot of money at risk out of my own pocket, and took the thing and put it on Broadway. And just to let you know how scary this was, the owner of the theater was already looking for the next show because they didn't think we'd last more than 6 weeks. True story. True story. The Nederlander Theater, they were already searching for the next show because they figured we're going to be in and out of there. Well, we lasted 6 years. We were the 27th longest running show on Broadway. I think now we're like number 30 because other ones have passed us over the past couple of years. And we were able to have a lot of success. So my role there, some creative aspects of it, because you have to be creative to be a professional speaker and perform, but was a lot on the business side. And doing things on the business side and negotiating some of the contracts and just overall, I was the lead producer. We had an amazing experience, and kind of all the aspects of it were great. All the stars. We were the cool show on Broadway. All the athletes, the musicians wanted to come. I get calls. Hey, Phil Collins is coming to the show tonight. So I would actually go, Hugh Jackman's coming, Paris Hilton's coming. So I would take them around, even Chelsea Clinton, who was very, very nice, but like hundreds of these situations, bands would come, the guys from Poison are coming this night, the guys from Journey are coming this night. So I was able to, and so many athletes, countless. I still have so many friends with professional athletes. As a matter of fact, the Tampa Bay Rays, the coach, Kevin Cash, he knows me. He called me the other day because he said, Barry, do you still have the hookup on Broadway that I can go to? So I helped him out. So, these are the types of wonderful relationships and friendships I was able to make from that incredible experience. So, once again, opportunity is everywhere.
Yeah.
How you look at things. You're looking at things saying, oh, if you're looking at it with a negative lens, then that's all you're going to see.
Yeah.
But if you're looking at this period of time, optimistic, this is a chance for me to make myself better. Yeah. This is a chance for me to build relationships. This is a chance for me to look around and see where are the opportunities. How can I help that family not be scared and buy this home and show them the comparisons? How can I help that referral source who maybe wasn't sending me business, but let me help them in this more difficult time market that listing or show customers why this is a good time to buy, because now they're going to be more open to it because they need me. If you look at this as a chance for you to do those things, boy, longer term, it's, don't play the short game. This is, if you think longer term and you think relationships and you start by giving, you will be amazed at what you receive.
And that is a wonderful place to wrap up right there, Barry. How do people find out more about you? How do they reach out? How do they get more information on an MBS Highway subscription?
Pretty easy to find, mbshighway.com. And you can, Barry at MBS Highway's email. So I'm all over social media. So I'm easy to find.
Very good. Excellent. Well, thank you again for being here.
God bless and thank you.
Awesome. And to all our listeners, don't forget, hit us up with a 5-star review on iTunes, and don't forget to subscribe for our next fantastic episode. Have a great day, everybody. Hey, it's Chris. Thank you so much for listening, and I hope that you enjoyed our guest today on the podcast. This is a reminder that we have just finished taking the greatest lessons from all of our guests and packaging them together into a brief online video presentation that's going to teach you the 10 most profitable ways to grow your mortgage business. And then we show you how to automate those processes in your business with people and systems so that you get the results without you having to do the work every day. This is quite literally a blueprint so that you walk into your mortgage business every day with pre-booked appointments with borrowers that want to meet with you and referral partners that want to send you business, so that you are spending your time inside your mortgage business on the highest dollar per hour activities, and you truly become the executive of your business, a true business owner, rather than just somebody who's going to a job every day and making a wage on the way through. This is an absolutely incredibly powerful training for you, and I cannot wait for you to experience it. So head on over to chriswebinar.com. That's chriswebinar.com to get that free training today. Now, if you could do me another favor, if you enjoyed this episode, please head on over to iTunes, search the Loan Officer Wealth Podcast, and give us a 5-star rating and review, really on any podcast platform that you're watching this on. That just 30 seconds of your time goes to help another loan officer in the industry discover this information and really help put their life and their business on track for more success. We are all in this together, and there is more than enough for all of us in the industry. So I would love if you left us that 5-star rating and review. Don't forget to stay tuned for our next episode, and I'll see you then.